Lithium Americas Corp., ticker symbol LAC, is trading near multi-month lows. But is this just a short-term dip or a rare buying opportunity for long-term investors? In this video, we're breaking down the real story behind LAC's price action, its massive project potential, the risks to watch, and whether this setup could lead to a strong rebound. Welcome back to Stocks Telegraph, where you get the latest financial market news and updates. If you're into high-conviction stock picks and strategic entry points, be sure to hit like, subscribe, and turn on the bell so you never miss a beat. Lithium is still at the heart of the energy transition. While short-term oversupply has weighed on prices, long-term projections remain bullish. Battery demand is expected to quadruple by 2030, driven by electric vehicles and renewable energy storage. Yes, lithium prices have recently fallen, hitting four-year lows, but analysts believe this is a temporary correction. In fact, by 2030, global lithium demand is expected to outstrip supply by nearly 97,000 tons. For investors, this may signal a strategic opportunity to accumulate lithium stocks like LAC while sentiment is low. LAC is a Canadian mining company focused on lithium development in North America. In 2023, it spun off its South American assets into a separate entity, allowing the US-focused company to zero in on domestic opportunities. Its crown jewel is the Thacker Pass project in Nevada, home to one of the largest lithium deposits in the US, with 13.7 million tons of lithium carbonate equivalent. Once operational, it's expected to produce 40,000 metric tons of battery-grade lithium carbonate annually, enough for 800,000 EVs per year. The U.S. government has backed the project with a $2.26 billion loan, while General Motors has committed $625 million for a 38% stake, locking in a key supply of lithium for its EV batteries. Lithium Americas Corp. has seen its share price decline significantly over the past year, currently hovering around $2.84, down about 45% from its 52-week high of $5.20. Several factors have driven this downturn. The global lithium market experienced a notable slump in early 2025, with some segments reaching four-year lows due to oversupply and weaker than expected demand, particularly in the electric vehicle sector. Additionally, while LAC has made progress on its Thacker Pass project, it has encountered regulatory and permitting delays that have introduced uncertainty and slowed momentum. Investor sentiment has also weakened. In the past month, the Zacks consensus EPS estimate for LAC dropped by over 30%, reflecting cautious short-term expectations. Collectively, these challenges have pressured the stock, though they may also be creating a window of opportunity for long-term investors. Despite the price drop, LAC has hit key development milestones. After its final investment decision in April 2025, construction at Thacker Pass is well underway. Earthworks are done, concrete foundations are being poured, and structural steel fabrication has begun. Phase 1 is targeting mechanical completion in late 2027, with full production in 2028. Backing this effort is General Motors, with $625 million in funding and a 20-year offtake deal for 100% of Phase 1's lithium. GM also holds rights to a large share of Phase 2 output. On top of that, the U.S. Department of Energy's $2.26 billion loan is one of the largest federal investments in a mining project, highlighting lithium's importance to national energy strategy. The Department of Defense has also chipped in with an $11.8 million grant under the Defense Production Act to support domestic lithium extraction. Together, these moves show high-level confidence in LAC's long-term role in the EV supply chain. With a market cap around $616 million, LAC appears attractively priced for a company controlling one of the most important lithium resources in North America. Analyst price targets average $4.54, implying over 50% upside. Still, some investors remain cautious due to development risk. When compared to lithium giants like Albemarle and SQM, LAC trades at higher valuation multiples. But keep in mind, those peers are mature producers. LAC is still in the pre-revenue phase, meaning higher risk, but also higher potential reward if things go as planned. Despite promising developments, Lithium Americas still faces key risks. One major concern involves legal challenges tied to the Thacker Pass project. In February 2025, organizations like Human Rights Watch and the ACLU criticized the permitting process, alleging it violated international laws by not obtaining proper consent from indigenous communities. This legal pressure could lead to delays or additional compliance hurdles. $10,000 per metric ton earlier this year, a 4-year low, mainly due to oversupply and inconsistent EV demand. Additionally, emerging battery technologies such as sodium-ion could disrupt lithium's dominance over time. And while LAC has secured significant capital through GM and government backing, further development may still require additional funding. If that funding comes through equity issuance, current shareholders could face dilution. These risks are essential to factor into any investment thesis on LAC. Despite the challenges, several positive developments could shift sentiment around LAC. Construction progress at Thacker Pass is advancing, with major milestones like the completion of early earthworks and the beginning of permanent concrete placement already achieved. Detailed engineering work is also more than halfway complete and is expected to exceed 90% by year-end. On the market front, analysts project a global lithium supply deficit by 2030, driven by accelerating EV adoption and energy storage needs, setting the stage for a potential rebound in prices. LAC's strong partnerships further strengthen its case. General Motors, for example, has committed $625 million for a 38% stake in the project and secured a 20-year agreement to purchase all of Phase 1's production, plus rights to a large portion of Phase 2. These agreements ensure stable demand and reinforce the long-term viability of the project. Together, these factors suggest that LAC may be well-positioned to benefit from both market recovery and strategic execution. LAC has the resource scale, strategic support, and market positioning to be a major winner in the next lithium cycle. It controls the largest known lithium resource in the U.S., has secured nearly $3 billion in funding and support, and is on track with construction. At under $3 per share, investors have a chance to buy into a company that could become a major player in the North American lithium market, if it executes. That said, this is not a low-risk play. Legal hurdles, market volatility, and dilution are real concerns. But for patient, risk-tolerant investors who believe in the EV megatrend and U.S. reshoring of critical minerals, LAC could be one of the smartest dips to buy. Thanks for watching. If you found this breakdown helpful, don't forget to hit that like button and subscribe to Stocks Telegraph for more sharp takes on high-upside stocks. What's your outlook on lithium and LAC? Drop a comment below. We'd love to hear your thoughts. Until next time, stay smart, stay curious, and keep investing with purpose.